What we're seeing is it's an interesting phenomenon for sure. There's been a massive, really rebasement. You're seeing leverage being flushed out of the system, really at levels that we haven't seen before. You're also seeing the fact that if you look at really any order book across the world, you're not necessarily seeing a marginal net buyer here. Everything is pointing towards a net seller. Whether you're an institutional hedge fund, pension fund, really a lot of crypto funds as well, there really isn't a significant amount of dry powder to stand by the sidelines and absorb some of the supply that's hitting the market right now. I would say on the flip side, we do see a healthy level of reset as well. There's not a significant amount of additional leverage from here that we see that needs to really get flushed out.
And that means essentially the selling is going to stop at some point, given that the leverage has almost been fully sort of flushed out of the market. Is that your view?
Well, if you look at what's happened over the last year or so, especially with a tremendous amount of institutional adoption, people have been very, very excited about what's happened from a regulatory perspective, particularly in America with things like the Genius Act and the U.S. taking a stronger foothold with respect to, paving the way for a lot of dollar-denominated type of overall crypto adoption. That led to a tremendous amount of institutional momentum. So this was actually supposed to be a big moment for Bitcoin that was supposed to really continue for some time. Monetary policy easing overall, continued earnings growth across a variety of different sectors. But what we've seen is, in addition to the underlying leverage flush that I've mentioned, a number of other tech sentiment fears, whether that's AI, whether that's potential monetary policy being stickier and being higher longer, has led to a lot of the newer money that's come into the market leaving. So while we're seeing the leverage flush out, we aren't necessarily certain who that incremental net buyer will be tomorrow right now, especially with some of the near-term risk components in place. So while near-term we are, still, I would say, cautious with respect to the price of crypto overall, long-term we are still very, bullish on the asset class overall.
Anthony, it's Arjun here. I've been covering crypto for sort of more than a decade at this point, and we've seen these huge cycles before. But I'm told this time it was supposed to be different, and I just wanted to kind of pick up on a couple of those points that people have been saying over the past few months. One was this narrative that actually institutional buyers would be very key here to support this market. They're long-term holders. They're not going to panic sell in these moments of drawdown. One of the interesting stats I saw this week actually was the ETFs turned net sellers so far in 2026. So are we seeing the institutions now starting to dump crypto?
Well, that's certainly an interesting point, right? And when you think about the kind of last comment, I'd mentioned, right, the drawdown isn't totally about institutions changing their mind on crypto. It's really about who's actually setting the price at the margin. A lot of these ETFs in general, they're not purely institutional players, they're wrappers, right? And the flow reflects end investor behavior, not necessarily BlackRock or Fidelities of the world suddenly turning bearish. And so I think the ETF tape really tells you a lot about liquidity, not belief or conviction. And the convexity of that liquidity has been driven recently by a lot of those other variables tied to, again, monetary policy and certain broader secular and sector fears that have really seemed to loom the markets overall in recent days.
One of the other things, Anthony, I've said that probably won't happen this time is that we may not see the 70-80% drawdowns that we may have got in previous cycles. Bitcoin, I think, is around 45% off its all-time high, but there are some tokens, XRP, Solana, that already hit that sort of 70%, 60% mark as well. Are you expecting Bitcoin to be hitting those prior cycle lows?
Well, going through the various cycles, and when we saw obviously I would say most recent kind of peak to trough of 66 to 16, which feels, just like yesterday, but was a couple of years ago now. There's, a couple points there. And while we can't fully predict, obviously, what this trough is going to be overall, I would say that those same sorts of ETF and institutional wrappers and demand that's there, right? While we are seeing, net outflows churning red, right? We've seen net outflows really since the Q4 of 2025. There is still a level of consistency and demand. I think there's a lot of fear around what some of these potential contagion effects might be of, micro strategies of the world, and what that could do if, you got to a point of pure doomsday liquidation and suddenly there was an incremental net supply of Bitcoin hitting the market like we haven't seen, in recent times or really ever, right? Or potentially miners even starting to have to sell off their holdings by a combination of both potential power costs, hardware costs, and profitability just going deep into the red. That being said, I actually do think that that same institutional demand that's somewhat dried up recently is sticky enough today where you will see consistency overall at some point in time and rebalancing into the asset class. It's here to stay for sure, and that should provide a deep level of support overall.
Anthony, finally, what do you make of the wider tech crowd? Because everything seems to be connected in some way, shape, or form. You've got a forced gold selling, forced Bitcoin selling, and this kind of plays into the tech selling. So this never-ending feedback loop, if you will, at what point will that be stopped?
Yeah, there's a lot of variables at play here, right? You're looking at this sort of massive, SaaS apocalypse, which has driven a huge part of the general sell-off overall. You've basically seen a total flush and multiple resets across the board here, right? And I think what is really happening is, some of this panic is really due to, really what's defensible and what's rationalized. And when you look at the asset classes and you look at their forward terminal values, a lot of that's predicated on obviously, the entrenchment or stickiness in that core asset today. And when you have multiples that are being questioned and coming down across the board, things that have gotten so high to begin with and so elevated, and when you have obviously this level set of, potential concern or fear, what typically happens is there's very much so, blind selling, and nothing is really, susceptible or defended in that certain scenario, particularly when you're looking at very much so growth-oriented assets like Bitcoin, which has been heavily correlated to, certain tech indices like the Nasdaq, for example, as well as high growth names that don't necessarily have durable defensible earnings overall. And then gold itself, which, historically,
Right.
while it has tended to behave like a safe haven, has more or less been a significant driver of appreciation. So there's been material profit taking.